Okay guys, welcome back. This is a video you do not want to miss. Bitcoin has made an explosive rally upwards. We're going to talk all about it, where it can go, what this means, and what will happen next. Let's get into it. Okay, Mega team, welcome back to the channel guys. Thanks for tuning into today's video. So first and foremost guys, Bitcoin obviously made a very explosive move upwards. We're going to talk about that today and really discuss what happens next. The focus on today's video is going to be a little bit more macro, but I think that's a good thing for, the context of today. As we've seen this big price move upwards, a lot of people are thinking, how important is this move? What does it mean? Where will it go? What is the data saying? That's what we're going to take a look at. Now, if you like the channel, if you like the content, consider dropping a like. It does help. Consider subscribing if you haven't already, and definitely leave a comment down below. Now, head down to our pinned comment section, click the link to our Telegram channel, get access to all the updates, analysis, and more. You can join our Telegram community there. And if you're interested in VIP trading signals, you can go ahead and contact us through the link down below or in Telegram to get access to our VIP channel. Let's get into it. So Bitcoin's made a very explosive move upwards. Let's take a look at some of the data. Volatility is still very, very low. We're at 1.49%. Obviously, we haven't been this low for a very, very long time. It's 4 times in the last 7 years we've seen volatility at this level. As you can see on the chart over here, this green graph over here actually indicates the volatility, and the yellow obviously indicates the price. As you can see, if we just go ahead and draw a trend line across, dragging that trend line across, we can see we've actually been at this level here, which was on the 22nd of July 2020. Once again, 27th of March, and once again, 9th of November. And then the last time we were at that level was all the way back in December 2016. So about a 7-year period, guys, we've been at this level in volatility 4 times. Volatility is very low for Bitcoin. And when volatility is low and price action is consolidating, it indicates a big reversal or some continuation is coming. A big move is coming. So let's take a look at this. Bitcoin's monthly return has actually just flipped green, which is insane. We've been red basically the entire October, but this move has actually propelled us upwards and we've just flipped green. It'll be very interesting to see how this closes out for the rest of the month, so we'll definitely keep an eye on it. Back to our charts, guys. So we've been talking about this chart for a very long time, and obviously everyone on the channel should be sick and tired of this chart by now, but that is a good thing. We should be, because this range is boring, but at the end of the day, these levels are life-saving when the crunch comes to time, when it actually gets, the ball gets rolling. These levels, these horizontal levels that we've been talking about for months, now do come into play. And as you can see, guys, we've seen a few things. First and foremost, we saw that 19,800 break. 19,800 break was a key trigger to either a massive rejection, like we've seen many times before, in this range over here, huge rejections, or a pump up to this range. Okay, we've seen that again, equal times, about a 50-50 chance. And in this instance, we actually saw that pump up to this 20,272 to 20,500 level. Now, the thing is, this move in terms of horizontals is exhausted. The move will continue if the price is able to get over 20,500. If the price is able to get over 20,500, we will see a big continuation, okay? Until then, we do have to expect the potential chance that we can actually see a retracement of this move back down to 19,800, but we'll keep an eye on that as we go. Again, jump over to Telegram, stay up to date with the videos. We talk about Bitcoin every day to keep you guys up to date with what is happening, and keep you guys up to date with the charts and the price action for Bitcoin. So don't miss a video if you want to know exactly what's going on. Anyway, what will happen was, I guess everyone's a little bit more bullish in the market now. What will happen if the price does actually get over 20,500? What will that mean? And actually, it might even happen in this video if the price continues upwards. Who knows? But what will happen if it does? So let's talk about the zones, because the zones are really, really important. So we see this zone over here, 20,500 to 20,271. Let's go back to our bigger Bitcoin chart over here. This is our macro chart over here. We've got some macro indicators and lines in. And you can see that same horizontal level as here, indicated 20,500. As you can see, guys, 20,500 is a pretty major trigger zone for a continuation upwards. Within this range, we generally don't have too much resistance. We can go back in time to actually see that fact. Back in this range over here to 20,500-ish to 22,500. We really don't have too much historical price action or historical resistance. Only real resistance and historical volume we have was this area here and this scam wick upwards. So we don't have too much. It's quite an easy range to tackle if the price does push upwards. Therefore, we have to be inclined to believe if the price does clear this neckline, and I'm going to go ahead and draw it out really quickly. As you can see, this neckline being this entire area here, eliminating this outlier, we do expect the price to then continue in an equal measured move from the bottom upwards to that target, which takes us directly to about 22,600 into that range, which actually puts us precisely in this upper resistance range, which, if you don't remember, a few months ago we're talking about a lot, is that 2020 December crunch zone, okay? The zone that we tested and got that last bit of rejection before Bitcoin went basically parabolic from $24,000 to $41,000 over the course of a few weeks, okay? Now, I'm not saying it's going to happen. I'm not saying Bitcoin's going to go to $41,000 in a few weeks. What I am saying is this potential resistance zone that we can come up and retest if 20,500 is reclaimed is a major macro trigger for a potential bear market reversal, which could then lead to a continuation upwards. And that is why we're so interested in this level. As you can see, zooming out, if we do break through this major level, the next major resistance is sitting all the way up here, $28,000 to $30,000. And we can actually go ahead and use our visible range volume profile, which indicates historical volume in terms of selling and buying over certain horizontal price points, okay? So we can go ahead and change that to row size of 200, just get a little bit more of a zoomed in view. As you can see already, guys, we have major resistance at 20,500, all right, indicated by this huge valley, pushing upwards. We have a bit of resistance at 21,400, a weaker resistance than we've seen at 20,500. If we get through this level here, we have almost no historical trading volume here, meaning it won't take a lot of actual volume to rapidly push the price upwards if we get through that range. So that is the macro outlook for Bitcoin right now in terms of the near to not so distant future if we do reclaim 20,500. Now, we're not talking about an hourly candle. We're not talking about a little break. We're looking for a daily close above 20,500. The reason I say daily is because we look at this chart here. You can see the daily, we're on the daily up over here. If you go down to our chart and see where that 20,500 neckline lines up to, it is a daily resistance, okay? So we're looking for a daily close above 20,500, hopefully and potentially even a retest of that level to confirm that this consolidation phase, this consolidation period we have seen since the 28th of August is over, guys, and we can continue upwards, okay? So we're looking for that. Now, if we do happen to go this route, if we do continue upwards, and we'll actually talk later in the video about potential limitations to this and reasons why it could fail and come down, we'll talk about that. But if this does happen and we do go upwards and we do break through this level and we retest 28,000 to 30,000, we are now retesting the macro bear market resistance. This downtrending resistance here is that bear market resistance. Breaking through that level, clearing $30,000 puts us out of the bear market. It puts us into a new trend. We're going to talk about that in another video, maybe when we get a bit closer, or when we do a complete macro analysis, we'll go ahead and look at the technicals, some of the larger time frame moving averages, slower moving averages, to talk about that more, but I think that's good for now. So what are the limitations of this move? How can this potentially fail? Could we see a rejection from this level? And more importantly, guys, if we do, where will Bitcoin go and what could trigger a rejection? Looking for an honest, reliable and accurate exchange that you can trust to trade on, go ahead and sign up to BitGet with the link down below and join myself and all of our other VIP members and other members who trade on BitGet daily. There's a whole range of benefits and features you can actually get by trading on BitGet. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures, is one of the lowest in the game, and most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards and access to the Mega Whale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. So if you don't already know, guys, we've been keeping up to date with the economy or economic news. The 2nd of November, the 3rd of November for Australia, guys, the 2nd of November is the FOMC meeting. And we already know that the market is definitely bullish in terms of what the market perceived to risk, the overall systematic risk to be right now. It is more perceived as bullish. And the reason being is because a lot of people are expecting the Fed to pivot. Not only are they expecting the Fed to pivot, it is assumed that the interest rate hike will be 0.75. And the reason why it's assumed that we're going to pivot and it's going to be 0.75 is because the Wall Street Journal leaked an article, or supposedly leaked an article, detailing this information. I talked about this in a few videos back. The problem is the Wall Street Journal pushed this information out to the public without verification from the Fed, nor can the Fed even rebut or say that was incorrect or correct until the 2nd. So this puts the market in a delicate spot, because now the market has reacted positively to news that is potentially falsified or not completely accurate. So the market has seen this, it's gone bullish, and like we said a few days ago, we expect the market to react positively until the 2nd of November. We expect uptrend until the 2nd of November because the market environment, the market sentiment is now bullish. But if the Fed doesn't talk about the pivot, they don't mention the word pivot, if they don't mention, the Wall Street Journal being correct, if they don't say anything to do with that, the market will react very poorly and we will see this entire move retrace down. So it's very important, like I've been saying, yes, we need to keep a look at these levels. Yes, we need to keep an eye on 20,500. Yes, we need to keep an eye on 18,400. But it doesn't really matter what happens here if it happens before the 2nd of November. Because the 2nd of November, the entire market risk, the systematic risk in the market, what actually drives macro price movements is going to either be completely altered or it's going to be verified to be what is expected now, okay, and the market will continue. So we're going to see a continuation or we're going to see a crash, but we're not going to see sideways. That is what I'm trying to say. So do not front run this too much. And I know I'm saying don't front run it, and then here I am, I bought Bitcoin at 18,000. Yes, I bought Bitcoin at 18,000 in June. I believe the bottom is in. I've not once since the 18th of June, actually, since the 12th of November, 2021, changed my prediction. 12th of November, I said we're going down. 18K, 18th of June, 16th of June, I bought $18,000 and I've said the bottom is in. Since then, not once have I changed my analysis, not once have I changed my mind. I believe that wholeheartedly, entirely, the bottom is in. And I do continue to believe that, but I'm not stupid at the same time. I'm aware the market can move in opposite directions. I'm aware small changes in the economy, in particular when it comes to overall systematic risk, can impact the macro environment so much that we'll see massive shifts in the perceived risk in the market, and therefore the prices of assets shift. So we do have to be aware the 2nd of November, guys, is an important date. This is probably one of the most important FOMC meetings now, due to the fact that the market is so speculatively bullish right now based on the news that was unofficially released. So we do have to be careful here. But if we do drop down here, I'd be looking at a similar reaction to what we've seen before. All we can go off, guys, is what we've seen before. We are technical analysts at the end of the day. We are traders. We don't really care. We go off the trend. We go off our strategies. We go off our systems. What we have seen before is every time we retest this level, we see an eventual retracement back to 18,700 to 18,800. Okay? It happens slowly. It takes a while, but we'll see it. So if we see a rejection here, I would be expecting that move back down to 18,800, back to the 18,700, and we're back in that death zone, back in this horrible range we've been in for a very long time, between 19,800 to 18,400. Stay aware, guys. Don't fall for it. Always be objective in your analysis. Don't see the price going up and FOMO in. Not the time to buy. If you see a green candle, it doesn't mean the price will continue. And if you see big green candles like this, it doesn't mean you should buy. It means you should have bought already. Okay, so you buy red, you sell green, simple as that, all right? So do not FOMO in. And if you're gonna FOMO in, because I've had a few people message me say, Whale, should I FOMO in now? I didn't buy 18K, is this it, should I FOMO in? The answer is no. If you've been paying attention to the video so far, you'd already know 20,500 is the trigger after the 2nd of November, all right? So FOMOing in now, you're technically buying at the absolute top of this range. And here's a nice psychological trick I like to do when I'm deliberating on whether or not my position entries are really good. I like to flip the chart. Now, if you knew this was a horizontal range, we eliminate this. If you knew this was a horizontal range and you saw this chart for the very first time right now, never seen this chart before, not even knowing what it is. For example, you go show a complete stranger who doesn't know what it is, okay? Would you buy would you be shorting, expecting the price to go down, or would you think longing, expecting it to go up would be a better risk return? The answer is very obvious. I don't even need to tell you. The answer is very obvious. Looking to short here and expecting it to go down is less favorable in terms of your risk as looking to long and it go up, okay? So when you're taking macro analysis, when you're doing short-term analysis as well, always question your own decisions. Test whether it's, okay, I like the look of this chart, and I like the look of this chart because of blah, 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 and it's my psychology kind of influencing why I like it, or whether or not you're looking objectively and it genuinely looks good. And you can flip the charts and invert it to try trick your mind into believing different perspectives. Because sometimes a chart will look bullish, and then you flip it, and then it looks really, really bad. And then you're like, oh, I shouldn't be longing. Actually, I should be shorting. So that's something I like to do when I'm trading. I like to invert the chart just to give myself a different perspective. But as soon as we flip it, we kind of look at things from a different light, a different angle. Nevertheless, everything we have said is very, very valid. Keep it in mind. Guys, I think that's enough for today's video, but I actually want to go over a few things first, and that is, let's take a look at the DXY. And the DXY has come down to major support, sorry. We actually did have this bull flag formation, which we've been talking about for quite some time, but we broke down from the bull flag, guys, crazy. Broke down from the bull flag, we created this symmetrical triangle pattern, and you know what? This symmetrical triangle pattern is a better looking symmetrical triangle. It has very, very clearly 2 retests at the top side, and 3 retests now at the bottom side. If this symmetrical triangle continues, this will go up. And 2nd of November, guys, keep it in mind, if the 2nd of November comes out, Fed's rates go up, DXY pumps, Bitcoin goes down, very obvious stuff, right? Taking a look at the total crypto market cap, nice bounce from that bottom zone, really beautiful bounce, guys. Obviously, this is the danger zone. We don't want to be falling below here. We fall below here, we are in a lot of trouble. So keep an eye on that, obviously. Breaking above this level here, really, really bullish stuff. Looking for a macro reversal, looking great, okay? Below, not so much. USD AUD got destroyed. Poor me with a lot of money in US dollars. Got wrecked, but you know, falling wedge pattern developing, DXY developing some sort of symmetrical triangle. It could continue upwards here if the market turns around. Let's take a look at the Dow Jones. Not moving too much, actually. S&P 500, we broke through that major resistance zone over here. Got rejected. We're still in that resistance zone, yet to make a actual directional move. Like we said, directional move will occur if we go through here up to this range, or if we're going back down to retest. The bond yields on the 10-year and the 2-year are dropping. The 2-year hasn't dropped too much. The 10-year had dropped a fair bit. Let's go ahead and just quickly go back through this chart one more time, guys. So just to reiterate everything. Major triggers, 20,500, 18,400. Losing 18,400, we continue down. If we lose 18,400, we are going to retest the absolute bottom, which is 17,600. Okay, simple as that. If we lose 17,600 on the weekly chart, we are going to $12,000 to $13,000. Okay, and we've talked about our upward price action, we've talked about our bullish scenarios already today. So keep it in mind, guys. Be aware, stay tuned for the next video, and we'll see you guys tomorrow. Cheers.